What's up, fam? Welcome back to another video. Today's video, we're gonna be explaining order blocks and how to use them to catch sniper entries. Remember, these videos are for educational purposes only. The forex market is very risky. You will lose a lot of money. Do not go and trade unless you know what you're doing. So this is why these videos are here, to explain how the forex market works and to show you how to make money in the market. Just please do not go in the market thinking it's simple. You will lose money. Take my word for it. Order blocks. We're gonna explain what order blocks are, how to use them, how to get confirmations from order blocks, what order blocks to use, and everything. So we do have a free group. Link will be in the description. This trade was not sent to the free group. It was sent to the VIP group. Link in the description will be for the VIP group as well if you want more information about that. My email will be in the description as well if you want to contact me if you have any information. We also provide mentorship and all sorts of things. So just check out the description if you need more information on anything. And without further, let's explain. We're going to be using the CHF JPY pair. Okay, before I get into the chart here and mark this up and show you what I've seen, let's explain the order block. Okay, the order block is the last down close candle before an up move or an impulsive move. It could be the last down close candle or last up close candle. So down close candle right here would be a bullish scenario if you're going to the upside, and then it would be reverse for a bearish scenario. It would be the last up close candle. So this right here is the order block. This bearish candle right here is the order block. Now the thing about the order block is you don't just take any down close or up close candle. You want to make sure the order block has took some type of liquidity, or the liquidity, some type of liquidity is taken around the order block to confirm that we'll be impulsively moving to the other side. Because if you just take any up close and down close candle, you're gonna lose. But you want to make sure the order block either takes the liquidity itself. It's more confirmation if the order block takes the liquidity itself, or it's around a point of liquidity that was taken. I'm gonna explain it more. You'll see what I mean in this setup right here. That's gonna explain everything. It looks exactly the same actually. The setup that I'm about to show you with CHFJPY looks exactly the same as this picture here. It's really crazy. I didn't even notice that till now, but let's get into it. Okay, so in CHFJPY, what I had seen was we had seen this liquidity right here being formed right there. Remember, you have to watch the other video to understand what liquidity is. But we had a hit right here, then we rallied to the upside. We did all this over here, and we had multiple wicks down here. Now when I seen all these wicks down here, I knew the market was creating liquidity, and I knew the market was gonna come down and grab the liquidity before we continued to move to where we wanted to move. So we had liquidity here because all these points people were buying the market. So there's a lot of money, a lot of stops, a lot of stop losses resting below all these wicks over here before we came right here with this down close candle and took the liquidity. Now right here, this is an order block. This is exactly what I seen. This candle right here, this down close candle before the up move. Now also another confirmation for an order block is you want to see it break some type of structure. So up here we had all these wicks up here, even up here as well. We had all these wicks up here that the market was struggling to go past. And then you see after we took the liquidity and created this order block, we immediately impulsively moved to the upside and broke structure up here. So that was already confirming to me that, you know, we're going to continue to the upside. So this confirmed the order block to me because first, confirmation A, the order block took liquidity. Confirmation B, there was a impulsive move to the upside that broke structure. And then confirmation C was The fact that, let me show you. You see how fast that this market went to the upside? Hold on, let me grab it. You see how fast this market exploded to the upside in 2 hours, and see how slow we came back down. This is a correction. We took damn near 2 days to come back down, but we impulsive moved in 2 hours. So that was another confirmation to me because the momentum, you can see the momentum is towards the upside. Now look at these candles right here, towards the upside. So that was another confirmation to me. Okay, as for entries inside the order block and where to, buy, you want to take the open of the order block, so the open right here, to the 50%. So let's mark out the 50% of the order block. So from the open of the order block to the 50% of the order block. So this zone right here, would be your entry zone, because we don't want to see candles go below the 50% of the order block, because the 50% of the order block is where most of the orders are in that block. It's where most of the orders were surged inside of this block to get this impulsive move. Most of the orders are resting inside of here. So when we come back down, we're mitigating these orders. So we're going to have another impulsive move to the upside. So the way about going about this is, when you see this, you either want to wait for the market to come back down into your entry zone and wait for confirmation on lower time frame to enter. So you could have either a smaller stop loss or have a better entry. But me personally, I simply set a buy limit on the open of the order block. So I had set a buy limit on 115.080. That's where my buy limit was, because it's easier, because sometimes you don't always catch the buy. You don't always catch the buy with the market execution, because most of the time when the markets come to an order block, they simply just run away from it. Like you see right here, a tap, and then it ran away from the order block. So yeah, this trade was sent in the VIP. Okay, and also for targets, where would you target? Okay, based on what this had going on, we had imbalance all throughout here. We had inefficiency all throughout here. Before we came up here, we had inefficiency. So basically what I targeted, my first TP was this order block right here, the last up close before this big impulsive move down. So for a safe TP1, I targeted over here at 115.750. That was my first TP right there. And then my second TP was like over, I don't have the full setup on here, so I'm just going the other one. Okay, now you see it. Boom. First TP was 115.750. And then my second TP is up here on these equal highs up here. So which is about 112 pips. We got an easy 70 pips, but second TP is up here, getting up into this liquidity up here. The order block is very simple, but don't just take any up close or down close candle you see with the impulsive move. You want to make sure liquidity is taken, because if you see an order block and there's liquidity below it that has not been taken, most likely the order block is not going to hold, because liquidity overrides the order block. Liquidity damn near overrides everything. So always focus on liquidity. Liquidity is the main thing, and this is how the markets work. That's how the banks make their money. So they're gonna take the liquidity. They don't care about the order block. This what I just taught you here, you could run off with this. You don't need nothing else. If you focus on liquidity and order blocks, impulsive moves, breaker structure, you're set. You don't need to focus on nothing else. This is really all you need to know. I have other stuff to lower your stop loss and to make your entries better and other things like that, but this is a big overview. So you could take this and you could do something with this. So don't just brush this information off. Use this information, because it's very, very worth it. Trust me. So don't forget, join the group. If you want to join VIP, let me know. Enjoy yourselves. Do not get trapped by these market makers. Look for the setups. Make sure you have confirmations when you're taking your trades. Do not let these markets take your money. So enjoy your day. I'll see you on the next video.